Good morning, everyone. Really nice to have you on board this morning. We are together for 30 minutes and we're gonna try to time box this webinar of today. With me, Jérôme.
Good morning, dear audience.
Which is our shipping expert, our captain, and myself, Damien Mironov, and I am the CPO, Chief Product Officer at Apply. The main theme of today will be what are the forecasts for the container shipping market as the summer approaches. And let's see our program of today. The first point will concern the current situation of shipping industry. And then we will speak about forecasts with main examples in particular lanes. And then at the end, we will have a presentation of our smart solution. It will take only 5 minutes, 5 to 10 minutes max. And of course, questions and answers at the end of this webinar. If you have any question during the webinar, feel free to ask them in the discussion item. We will try to do our best in order to answer them during the webinar. Otherwise, it will be at the end. Since we cannot speak and watch the discussion at the same time. All right, we will speak right now regarding the current situation of the shipping transport. So Jérôme, can you please explain what are happening at the moment? Yes. And maybe take an example of the first shipping update regarding Shanghai to Le Havre yes. In sea freight.
Thank you, Damien, and welcome to everybody. I say hello to the usual suspects and a big welcome to the newcomers to this webinar rendezvous. We try to make it now on fixed monthly basis, or at least bi-monthly basis. And of course, yes, it's quite. To me, it is the right time to dig a little bit and to explain what's happening, to try to explain and to see together what's happening on the market, because there is some changes for 2 months, 3 months now, and it is really a good opportunity to try to project and also to illustrate applied data about what's going to happen in the near future. First corridor, Asia-Europe, North Continent. We are not including West Med in this corridor, which has significantly different dynamics than this one. What we have seen for the past 2 or 3 months, it was, in the meantime, a big upgrade of the long-term contracted rate, and in the meantime, a trend going downward for the FAK rates. And basically, it started in April, and now we are reaching a point where some contracted rates are seriously under the threat to see some FAK rates going close or at the same level, and today in some exceptional circumstances below. But this is a time of talking completely exceptional. Why? Because first, well, inflation, of course, I will not repeat again what you have seen everywhere in data, in news, in newspapers about what happened on the market. Inflation in Europe, the war effect on the consumption, and also, I think, the key driver of the current situation has also been the situation of stocks in Europe. And not only in Europe, in Occident in general, and we can talk globally for the US also and for Europe. That is to say that there is a lot of cargo in warehouses, prices of warehouses and prices of stock are increasing, and so we see that the retailers for the past 2 months gave a priority first to sell existing stocks before considering ordering again. And that's basically the reason why the tsunami that was expected after the reopening of the Shanghai lockdown didn't really happen. And so we saw FAK rate softening, but once again, FAK rate is not the market. Of course, shipping lines would like, in some circumstances, to see FAK being the market, but FAK does correspond to 15 to 20% of the volumes. So it's a good indicator. And of course, it's true that now we are at a turning point with contracted rates and FAK rates being close. Latest benchmark, yes, on the market, indicates that the psychological $10,000 per 30-footer psychological yardstick between Asia and Europe has been broken to lower levels. But what we saw on the market today, on the forwarder market for June, not yet for July, but for June, it was some prices for the best ones in the areas of 8,500, 8,500, 9,000, 9,500, and also some key players remaining above the 10,000 price tag. The service didn't improve really. The transit time didn't improve really. And what we see it is that there is, from the shipping line side, a very chirurgical approach about the capacity to be offered in order not to deteriorate further this FAK rates, because of course, what the shipping lines doesn't want will be to have to reopen some contracts during the summer. So that's where we stand today. Maybe a quick word about the behavior on the market, taking into account more political aspects, particularly in Europe, which is the political empowerment of trying to get inflation under control. 1 year ago, FAK rates were significantly higher in the 16,000 bracket, around 14, 16,000. So it's clearly a decrease, but that doesn't mean that immediately you will see the impact of this decrease on the FAK freight rates, which correspond to a small part of the market, on floor prices. It's quite evident, it's quite obvious that we will not see immediately some decreasing prices on the floor. So that where we stand today, there is some capacity, there is some perspective of new capacity coming, but I would like to highlight the point also that even if there is some new capacity coming, most carriers are entering in a plan to withdraw massively some vessels in their fleet that will not be IMO 2030 compliant. And it will start in months to come, and it will be I think a game changer for 2023. So we have to be careful not to bet too much that the new capacity will ease the rates. It is not that obvious at this point. Maybe, yes, Damien, we can have a look at the other corridor.
Rotterdam, Shanghai.
Rotterdam, Shanghai. Bargain of the day. Export rates from Europe to Asia are unbelievable. To me, they are not covering the operating costs of most of the carriers. That's the reason why in the past weeks you have seen some extra fuel surcharge afflicting on putting on the top of the rates of the eastbound business, of the eastbound market. It's very low. It's very low. Why? Because big volume in terms of I'm thinking about wood. I'm thinking about papers. All these businesses are severely under threat from Europe, and so that means that there is not that much cargo to leave Europe for Asia. So in the meantime, we are in a better than empty approach from the shipping lines regarding this business, who take in account the fact that they have to find a good balance between sending quickly some empties back to Asia to get a better payback with a quick turnaround, and in the meantime, keeping supporting the exports, but with volumes which are not there. It is a bit surprise for me because honestly, I thought that the export market from Europe would be more difficult for shippers due to the fact that we were expecting a boomerang effect from the last blank sailing programs from Asia in April, basically in April and in May, and we were expecting a tough summer. I am talking for the exporters, have to be careful because there is a limited number of departures, but apparently there is no pressure on space. Be careful anyway, there still can be some pressure on equipment.
All right, let's see the last one regarding the actual updates.
Yeah.
It would be in Belgium to
Transatlantic. Yeah, transatlantic. It is the unbelievable market within the three big east-west routes. It is because to me, we are between us. To me, what happened on this market is completely artificial. That is to say that there was no COVID from China expected to explain the trends of the upgrade of the market. We have to remember that before the pandemic, to go to New York or to go to the East Coast, basically the market was between 18,000 and 20,000 and 2,000, 1,800 and 2,000 US dollars per 40. And significantly, we have seen this market being upgraded just by capacity control. And reaching some points when you have to pay 7,000 US dollars for a 40-footer, of course, luxury, in some cases, but not all cases, wine and spirit, pharma, but pharma is reefer, it's a different story. But I mean, high-paying cargo can bear this kind of extra cost, but chemicals can't, raw materials can't. And so we are reaching some limits, and 7,000 seems really a very high level, of course, of freight rates for this segment. Capacity is tight. There is some news about MSC, which is a K player who is going solo also with an extra service. So maybe it can add an impact on the market, but for time being, the capacity is very tight, and these are small vessels. We have to remind that on the transatlantic, the capacities of the vessels are very small, between 4,000 to 6,000 TEUs, and that is to say that there is not a lot of room to play.
All right. Let's jump into the second part of this webinar, which concerned the forecasts for the container shipping market. So I have to remind you that all the graphs you've seen during the first part is, of course, from our Apply platform. We will speak about that a little bit later on. So could you maybe comment this trend, this
Yes.
index regarding Europe to North America East Coast?
Yeah, of course. So we see basically for the 6 weeks to come, as per now, the future trend concerns the 6 weeks to come up to beginning of August. And traditionally, it is a very strong season from Europe to the US. It's considered as a peak season right now. And that's the reason why we see the market picking up a little bit again after it has been softening a little bit, particularly due to the impact of the contracted rates coming, volumes coming during that period of the end of spring. Very high demand before the production will close in Europe. Means yes, still strong freight rates to expect with very limited options for departures. We are nearly from Northern Europe, and it's the same in the West Med, in a fully booked environment, and so very tight capacity explains the reason why we have this trend for the future. If we go a bit further and we are talking about second half, we may still back for the US, yes, okay. for the transatlantic. We may expect freight rates to ease a bit because this pricing policy had a negative impact on volumes available. And we see too much businesses, papers and wood, that can't bear this price anymore, and that are very difficult to shift to break bulk. So in order to regain some volumes, I think that we may expect to have an average for the second half around 6,000, but it's a bit early. Yeah, we can go to the next one.
To Europe, Asia.
Europe, Asia, yes. So Europe, Asia, we explained it a bit before. Basically, we see it stable because the demand is low compared to the capacity. But of course, I think that what we can see in our trend will be the price of the fuel, because basically, in a better than empty logic, the shipping lines didn't fully integrated in their pricing policy the price that the fuel that was at $350 a metric ton in pre-pandemic is now above 1,000. And so I think that the shipping lines will try to be closer to break evens for the fools. If not, they may prefer to give a premium to empties. And that's a big issue. And it is also the big fight, I think, for the shipping line users in order to respect their interest. What we have learned in 2021 for the European exporters, it is that they missed globally 10% of their volume, forecasted volume, just because problems of equipment to find some containers, or problem of timing for the departures of the vessel. And I think forwarders and shippers have to put the shipping lines under pressure in order to protect their interest in this context.
Okay, let's jump into the last one before the quick demo. Asia to Europe this time.
Yeah, so you see, our bet at Apply is that up to beginning of August, the current trend we see the current trend we experienced for the past couple of weeks to keep on. That is to say, erosion, small but continuous erosion on the freight rates. Basically, in terms of revenue, it is not a problem for the shipping lines. The current plan with increased long-term contracted rates in terms of projection is not a real threat on a financial basis. They can easily, with this kind of figures, double the profit they perform in 2021, even if we have to take also into consideration that they have to bear higher running costs, and particularly due to fuel. My discussions with the market in terms of more longer prevision on Asia, Europe, will be to install the market on the long run with some contracted rates in the $8,000 bracket and FAK rate around the yardstick of 10, psychological yardstick of $10,000. I think that is the plan. But we will see. It will depend a lot about the demand. We had some fears about the European demand in April, well, mid-April to end of June. My opinion, it is that September we'll see the demand picking up, the European demand picking up with a stock situation which will be more under control at that time. And I sincerely don't expect rates to go down brutally. I think that we will be always in this 8,000 to 10,000 market, and with this hot topic of reopening or not reopening the contract. But at this kind of levels, it's still a very profitable business for the shipping lines, of course.
Thank you so much, Jérôme, for your expertise and the comments regarding the forecast. I should have told you maybe before the way to read this axis. This axis is based. Previously, we saw some benchmarks. So if we saw this kind of graph, it's more easy because it's a price of a 40-footer I-cube right here. So you have the bracket on the y-axis. And then we jumped into an index. This is the reason why on the y-axis, as you can see, it's based on an index. Since it's an index, the basis is 100, and the 100 based is in January 2017. Yeah. So let's jump into a quick demo since we have 5 minutes. I will show you my screen once again. As you can see right here, I'm already logged as Damien Mironov at Apply. What you have to know is this solution I will show you right now is a solution on the market for 2 years now. We have all the key players in the freight forwarding industries. We have about 500 million of transactional data. And when I say transactional data, it's really important. We are not, our tool is not based on quotation. It's not based, it's mainly based on transactional data, so invoiced data. I will show you the main solution. If you want a quick demo, more personalized demo, you will see at the end of the PowerPoint, you will have all the contact needed. So I will make a benchmark. So this is our first tool, the benchmark on the sea freights. I will jump into English right here. Of course, it's in French and in English. Jump into the sea freight, and I want to make a benchmark from LGB, so Long Beach in the US to FRLEH. It will recognize all the port code, of course. The coverage is worldwide regarding the sea freight. Of course, it's worldwide regarding the air freight, but the main topic of our webinar today is sea freight. This is the reason why I'm taking an example in sea freight. And as you can see right now, right here, the road coverage is Europe, mostly Western Europe, but we have some countries in Eastern Europe as well. And North America, it means cross-border from US to Canada and cross-border US to Mexico as well. So for the sea freight benchmark, only 2 clicks, Long Beach, the port code of origin, port of loading, port of destination, the pod, and then it will take the service type. I want to make a benchmark for 1 container, and I don't want to provide my price, but I can if I want to. And I'm clicking on benchmark. And then our algorithm will work right now, and it will take all the main port from all the main lines we have from Long Beach to Le Havre, and it will provide to the user a dispersion of the price from minimum to maximum. And the main information right here is the median price, the actual median price of today. We have really important information on the screens, which concerns the confidence index. You have to know that this confidence index is based on, let's say, 3 main criteria. It goes from A, which is the better confidence index, to E, which is the lower. At Apply, we like to say that in order to take a decision based on this tool, A, B, C, we are mainly confident, and you can take decision on this confidence index. D to E, let's say we want you to cross-check this information. So this confidence index is based on 3 main criteria. Of course, the frequency of us getting the data, the number of providers. If we have a lot of providers, the providers are of course our main user, and we have key freight forwarders which are contributing. It means that they're taking data from us, and of course they are providing their own transactional data in order for us to grow our database. So frequency, number of providers, and of course the volume of data that we have on this lane. So with an A, it means that we have a lot of data on Long Beach to Le Havre. It means that we have frequent data on this lane, and we have several providers on this lane as well. We have the last update. It means that our algorithm worked tonight. We are trying to make it work every night, and at the moment it's working every night. And the last part is our environmental impact. If you want a more historical view, it means that you will have all the view in the past, and you can go from 2 years to 1 year. It's basically what we've shown you a little bit before in the first part of this webinar. Really important, you have a methodology. You can have the documentation. It's a PDF, 14 pages. Really important for you to understand the way we are working. Okay. This tool, the benchmark, is really nice when you want on an operational way. You want to spot. You have a spot contract a spot rate in mind, and you want to cross-check. This is really nice on one-to-one basis. But if you want to make multiple lines, several hundreds of lanes, you can use the Smart Scan. The Smart Scan will do exactly the same that we showed previously, but you can take 1,000 lanes. So in order to create what we call a report, you can download the template right here. You download the template. You will have an Excel file, and then you upload this template right here, and it will provide what we saw previously on a unit basis for multiple lanes at the same time. This is our second tool, very powerful tool called the benchmark. And the last tool I want to show you today is the trends. The trends is basically what Jérôme comments previously. So right here we have an example from Asia to North America, but this time this is West Coast. It's an index based 100 in January 17, and it will provide the forecast of the lens right here, between 4 to 6 weeks. And of course, we have an annual comparison if you want to. It is really important for you guys in order to take the decision on the market. This is the three main tools we wanted to show you today. Just want to share two information. We have a blog called Market Insights. The Market Insights are available in English and in French. This is our experts as Jérôme, which are writing some long article and analysis on the market. And of course, Jérôme is more expert in sea freight. We have experts in road freight and in air freight as well. Feel free to consult our market insights, which are available on our website. And it will lead to the last part, the prices of our package. We have three kind of package: the starters, the pro, and the enterprise. And all the articles in the market insights are right here. This is an option that you can check or uncheck if you want to. But I will leave you on this one. And if you want more information, you can, of course, jump into our email address right here, jerome.dericles@apply.com. So if you want more information regarding the comments that he provided, feel free to contact. And damien.myronoff@apply.com if you want more information regarding, let's say, the product. I will be available, or I will redirect your email if you want to. And our customer care, if you want to book a demo, feel free. You have a Discover package. If you register right now on our website, you will kind of play with our platform, and it's free in order for you to try. You have a free trial for 15 days if you want to. So feel free to contact us. Thank you so much for being with us. I will check real fast if we have some question in the chat if you want to stay, but looks like at the moment it's okay. Okay, and the report of this webinar, yes, we can, of course, Mr. Dusaps, no problem. Thank you so much for your time. Thank you so much, Jérôme, for your time as well and your expertise.
Thank you, Damien.
Really nice to have you on board, and see you the next time after the summer.
I wish you a nice summer.
Bye-bye. Thank you.